Hello, this is Peter Pan. Today is 2013, 31st of May. For those who are not familiar with me, I'm a Hong Kong professional stock trader, and also I trade index future. A month ago, I started my channel and introduced several stocks. All of them are rising, even though the Hang Seng Index dropped more than 1,000 points. 1211 has risen 20% here. 712 has risen 19%. 1788 has risen 14%, and 3311 has risen 10%. So I really encourage you to look back to my prior videos. And also, one important thing is I have made a Facebook page. I encourage you to like my Facebook page. The reason is because I cannot contact you guys if the market has something bad that is happening. Let's say the index will, let's say I know the index will drop 1,000 points tomorrow, let's say. So I don't have any way to contact you guys other than using the Facebook. So please do like it. So in case something wrong, I can contact you guys, and also I need you guys to like it to help me promote my Facebook. This is also a big reason. Okay, so you can here that's in the front page of my channel. You can just hit this F here. You just click on it, and then you can go to my Facebook page. Also in the Facebook, you can search for Trader Peter Pan, TraderPeterPan. Okay, so let's get back to the China market. I'm saying it's a bull market. The reason is because basically the Shanghai Composite Index is greatly influenced by the several big banks and PetroChina. So let's look at the banks. This is the Construction Bank of China. Let's look at the reports here. This is the 2013 first quarter report. As you can see here, there's a for the net profit here. It has risen 15%, and then the net interest income has risen 12%. Well, I won't go into details, but you can get the big picture that they are doing well. It's okay. They are doing okay. So for the other big banks have similar profit like the construction bank. They are similar. Okay, another big company that influenced the index is the PetroChina company. Look at here, the net asset attribute to the shareholder 6.2 versus 5.81. This is, you can look at it yourself. Everything is similar versus last year. It's not too bad. So are the companies are really doing very bad? No, not really. Okay, so look at the PE. HSBC, because it is a very good bank, so there is a higher PE, justify the PE, right? Okay, you can say that it's a 15 PE. Like there's a Hang Seng Bank, there's a 12 PE, right? But look at the Chinese bank, the big China bank here. The construction bank is 6 PE, ICBC 6 PE. Bank of China, 6 PE. Okay, you can say, well, they are not as good as HSBC, but is it justifiable to have a 6 PE for the whole group? And then you look at the Chinese bank, the A share, it's even astounding. The discount is even astounding. So it is the right here, 4.8 versus 6.3, 2.7 versus 3.6. You can get here. There's almost a 40% to 30 to 40% discount on the A share. The A share is already cheap, 6 PE, but the A share is even cheaper, maybe 4 PE. It's really out of the reason that being so cheap is too cheap. But okay, you may say, oh no, even though they are cheap, because it's justifiable, because their balance sheet is forged, it's not real, It's true, for some companies in China, the balance sheet is falsified, it's forged, it's fake one. As a matter of fact, several companies has stopped the trading from because because of forged balance sheet. So this is real. But I want to ask you guys a question. Do you believe what you see, what all is said in the annual report? I don't think you believe all of them too. Um, for me, I think the market already factor in the ingredients of the possibility of being a forged balance sheet. So for the mid cap company, the market already factor in this factor. That's why the price is so cheap. As for the big banks, the possibility of being a forged balance sheet is very very lean, very small, because when the big banks they go to the IPO, they need to meet the certain standard, and as a matter of fact, most of the banks when they uh, before going public, their balance sheet is really terrible, but the Chinese government have already, you know, uh, take out the bad debt for them. They may pay like maybe there's a $1 trillion of bad debt, and then the Chinese government just took it, take it away from its balance sheet, so make it look good to go public. So, so actually, so the banks, the possibility is really almost, I say, very. You may say it look better, in real, but it's just a slightly better. I don't think there's a big difference in the accuracy, of the annual report. So that's why my conclusion is that it's really too cheap. Look at the PE is too cheap. Where the market already accounted the possibility of a forged balance sheet. So I think that the Shanghai Composite Index will break new high in 4 to 6 months. If fast, then maybe 2 months. And after it break new high, obviously it's a bull market. And if the Shanghai Composite Index will not drop below 1,870 points. So this is my prediction. Okay, so that's it. Thanks for watching. The above is personal opinion. Stocks and stock market price may rise and fall. The volatility of the stock market can be very high. Buying stock and derivatives has risks. Thanks for watching. Bye bye.